in to various platforms. This is the Pipe Gas Subcommittee meeting number 206, today's date being the 7th of August 2025. My name is Nomfundo Maseti. I am the member primarily responsible for pipe gas, and I'm chairing today's meeting. With me today, I am joined by the members of the Energy Regulator. I would like to introduce them, starting with the chairperson of the Energy Regulator, Mr. Thembani Bukula. Mr. Bukula, if you can kindly greet.
Thank you, Chairperson. Good morning, everyone. Thanks, Chair.
Thank you very much. I would also like to introduce the member primarily responsible for petroleum pipelines and the member of the Pipe Gas Subcommittee and various committees of the Energy Regulator, Mr. Musufukile Mkhize.
Greetings to you, Chairperson, as well as everyone in attendance, including the members of the public that are following us through the various live streaming channels. Thank you.
Thank you very much. Next, I would like to introduce the chairperson of the Energy Regulator and the member of this subcommittee, as well as various committees of the Energy Regulator, Advocate Nomalanga Sithole.
Good morning, Chairperson, and good morning to everyone. I think just for correction, I'm not the chairperson of the Energy Regulator. I'm the CEO, so thank you. Thanks, Chair.
I'm promoting you. Why you're not accepting it? Thank you very much. All right. Next, I would like to then introduce the member of this subcommittee, Pipe Gas Subcommittee, as well as the chairperson of the Audit and Risk Committee of the Energy Regulator and other committees that she is participating in, Ms. Nompumelelo Zakiti Sbia.
Good morning, Chair. Good morning to committee members and the members at NESA, and also to the public that is joining us today. Thank you.
Thank you very much. Thank you, members. Members, we are on item number 3 of the agenda, which is the adoption of the proposed agenda. Any changes proposed by the members? Are members happy then to adopt the agenda as proposed? By show of hands, members? Thank you, Mr. Mkhize. Thank you, Mr. Bukula. Thank you, Advocate Sithole, and thank you, Madam Sibia. Thank you very much, members. Members, on the issue of the declaration, the forms have been uploaded on the convene. Please remember to complete the forms and submit it to the Secretariat. If there is any verbal declaration, members can take that. Otherwise, you can declare using the forms. By show of hands, members, if there's any verbal declaration. There is none. We then proceed straight, members, to the matters that are here for deliberation. I'm on item number 5, the aggregate results, which are the average prices of gas for the pipeline gas as well as compressed natural gas for the year 2024. Please introduce the submission.
Thank you, Chair, and good morning. Chairperson, this is aggregate results for gas pipeline and compressed natural gas customers for the calendar year 2024. Chairperson, just a point of correction on section, on paragraph 3.1, on the section of the delegation matrix, it's supposed to be section 3.7. Chairperson, the calculations are in accordance with Regulation 410 and Regulation 11, read with Regulation 4.5, which promulgates for fair pricing through price transparency, and which then provide that the energy regulator must publish the aggregate results of customers per province on an annual basis. Chair, all licensees engaged in gas trading activities were requested to provide information on prices charged in the calendar year 2024. The format in which the requested information was done is outlined in paragraph 4.7 and 8 of the cover submission. Chair, the results for pipeline and CNG customers are separated due to value chain differences between the segments of the gas market. Chairperson, the calculation method is outlined in paragraph 4.9 from A to G. Chair, the calculated aggregate results for 2024 calendar year are on tables 1 and 2 of the cover submission. And the categories that are highlighted in yellow have fewer than 3 customers, and therefore the average prices will not be published as per the pipe gas regulations. Chairperson, to enhance the document through the guidance of the PGS, we have since, if I'm not mistaken, last year added the volume analysis section in the report. There as well, Chair, just to correct, the heading on page 17 is supposed to read volume analysis for the 2024 calendar year. Then, Chair, the tables 14 and 16, they show the amount of gas pipeline volumes and CNG volumes respectively for the calendar year of 2024. Chairperson, I think I'll end there. The recommendations are on page 21. We recommend that the PGS subcommittee approves the aggregate results for pipeline and CNG customers in the Gauteng, Free State, KwaZulu-Natal, and Mpumalanga provinces, and then the publication of the aggregate results on the NESA website as well. Thank you, Chair.
Thank you very much. Members, the submission is before you. Any questions of clarity? A show of hands, members, if you do have. Mr. Mkhize, please go ahead.
Thank you very much for the opportunity. Thanks to the presenter. On page 22, I note that they are highlighted. There's a highlight with no strike through, just to check if that is it not a mistake. And then secondly, I would like to check maybe, especially with if one look at tables like table 16, for example, with that much of reducting, is it really translating to the kind of benefit we envisage in terms of the transparency for now the external user? I think for us as the regulator, yes, there is a benefit in terms of seeing this, but for the third parties, is there any feedback regarding the issue of usability or usefulness, taking due cognizance of the reducting? Thank you.
Thank you, Mr. Mkhize. Advocate Sithole.
Good morning, Chairperson. Thanks to the presenter. Chair, mine is a minor one. It's just an enhancement to say that can we correct the citation of the minister in both the submission and the draft reasons for decision? I think those are in paragraph 4.2 and 2.3, Chairperson. Thank you.
Thank you very much. Ms. Magoda, can you please respond?
Thank you, Chairperson. Chairperson, I will start with the issue of the information that is not strike through on page 22. It is an error from our side. We will correct it by making sure that it is correctly strike through. Now, regarding some of the information that is blocked on the table 16, for example, it is really the volume information. Chair, we are unable to reveal that information because it is commercial sensitive. And given that this is the first time that we are providing this information, perhaps what we can do to try to ensure transparency, we can put it in the graphic format. I don't know if it will help, and then or just put the totals only without putting the percentage or the specific volumes for particular licenses. But in terms of revealing the information itself, we are unable to reveal it because of the commercial sensitiveness of the information. Chair, on the correct citation of the minister there, we apologize. We will correct it, Chairperson. Thank you.
Thank you very much. So Mr. Mkhize was referring to, it's not the volumes on table 16, it's the aggregate prices themselves on table 16, which are part of the decision, and then also table 17, which deals with the compressed natural gas traders. Also, most of it, table 16 is much better, but the table 17, a lot of it is blocked or highlighted. So it cannot be revealed because that is specifically stated in the regulations if you only have 2-3 customers. So it is stated in the regulations, so it becomes a bit of a challenge. So that's what Mr. Mkhize was referring to. Okay, with that, members, those corrections and the recommendations have already been read out. The only part on the recommendations that we need to change is just the approval for the publication to that we don't need to approve for the decision or reasons for decision to be put in our website. So we can just note that they will be put in the website. We don't need to take a decision for approval. With that, members, can you please raise your hand in support of the decision that is sought? Thank you, Mr. Pogula. Thank you, Madam Sbiya. Thank you, Mr. Mkhize, Advocate Sithole. Thank you very much. Members, we are now going to item number 6, and item number 6 deals with Mr. Dlamini, getting out of my convene. Item number 6 is the preliminary assessment of natural gas vehicles. That is NGV's application for the maximum price of gas. The period is 1st May 2025 until, I don't know why is it February, it's supposed to be a year. If you can just deal with the period, the February 2026. Let's just correct the period there. Please introduce the submission.
Thank you very much, Chairperson. Good morning, members. And good morning, members. Before members is a preliminary assessment of NGV gas application for a maximum gas price application in terms of Section 21(1)(p) for the period 1 May 2025 to 28 February 2026. Chair, before I proceed with this submission, I would like to make a point of correction under Section 3. The delegation matrix is supposed to be 7.6, not 2.5. And I would like to remove approval under ER and just keep it under PGS. Chair, the purpose of the submission is to request the pipe gas subcommittee to note this preliminary assessment of the NGV gas application and to also approve the publication of this consultation document for public comment with all the confidential information withheld as requested by the applicant. Chair, before taking members through the application, it is important to note that the maximum gas price application is indeed for a period of 10 months, spanning from 1 May 2025 to 28 February 2026. This was a request made by NGV Gas Chair, and according to them, this was necessitated by significant structural changes within their organization. For more information on this, please refer to Section 4.3 of this submission. Chair, the applicant provided that all data as well as assumptions used in this application have been adjusted accordingly to reflect this 10 months period. And lastly, Chair, the applicant intends to resume to a normal 12 months period in the next financial year, a maximum gas price application. Chairperson, for this 10 months period application, NGV Gas is applying for a maximum gas price of 388 Rand, 7 per gigajoules using the cost plus approach as per the prescribed methodology. And this is detailed under Table 1 of the submission. Chair, it is also worth noting that CNG traders trading costs are generally higher than their pipeline counterparts due to lower volumes experienced by this industry. As small customers are struggling to ramp up volumes, as you can see in table 1, that's as this can be seen in table 1, that's the cost of the gas is higher than the trading cost. This may appear inefficient. However, the trader, as a new entrant, they require critical access to service this unsafe market. Chair, in terms of the profit component, we again adopted the applicant's approach and determined a similar profit component, as this was seen to be more efficient given the challenges that are experienced by the CNG traders in terms of volume ramp up. And Chair, this also aligns with the previous regulator's decision regarding the NGV gas maximum gas price applications. In terms of volume analysis, Chair, it is important to note that the forecasted volumes for this 10 months period are 12.5% lower than the previous year's forecast, but they are 4.6% higher than the previous year's actual, as shown under table 3. And Chair, it is also important to note that these forecasted volumes reflect a 10 months period in line with the application period. Chair, in terms of the assessment of the application itself under table 4, it reflects an overall difference of 0.02% between NGV gas as well as NESA calculation. Chair, the reason for this slight variation it's due to when we were analyzing their OPEX, we disallowed the interest paid, though it's are already accounted for in the work calculation. Also, there was a difference in the net working capital, which emanated from the slight variation in trade payables due to the OPEX that we used. And there was a difference of 0.01 in taxation, and this emanated from the fact that we resolved the
we are losing you, Ms. Mhlongo, we are losing you. May you please just repeat for the record? Members, is it just me? Can somebody step in?
We also can't hear.
Yeah, we are losing. We're also experiencing same breaking.
Okay, thank you. Ms. Makota, please be ready to step in.
Yes, Chairperson, I wanted to assist by indicating that the difference in the OPEX is because there was double counting. They included it under OPEX.
Between NG.
Mr. Dlamini, I had to mute Ms. Mhlongo. You must be quick in muting, please. Ms. Makota, okay, please go ahead.
Yes, the differences in the OPEX is because it is double counting since they provided it under OPEX and also under work. In terms of the methodology, the interest plan should be under work. Chair, we are asking that the committee note the preliminary assessment and approve this discussion document for publication. Thank you, Chair.
Thank you very much. Members, any questions, comments on this submission? Madam Sibia, please go ahead.
Thank you, Chair. Thank you to the presenters. Chair, I think my question also was aligned to the issue of the 12 months versus the 10 months. I saw on the application, they did specify that is in line with their year end. Should we, as the regulator, align to anyone's year end? Because it's an easy exercise. You change the price, whether between the year. Surely we need to strictly say we go with the 12 months, because in any case, in my view, when I look at it, it is late already because it's effective from May and we are in August. So we are only approving I think 4 or 5 months which are left. Surely we should have a standard that it says we submit, have a lead time and say we submit a few months before the price required is needs to apply, because I see here they applied in April first time, and also the application was incorrect or incomplete, and it was only complete after that. And then now the second issue is it's the May issue. It's the issue of the 10 months. So that is where I wanted clarity from the team to say, don't we have a standard with regards to those two aspects? Thank you, Chair.
Thank you, Madam Speaker. Mr. Mkhize.
Thanks, Chairperson, and thanks to the presenters. Yeah, I had a similar concern, and I think that when regarding the time frame, Chairperson, and I think it would help when there is consideration to also indicate when the next one is going to be lodged, and not just leave it at saying there's going to be a change in terms of moving to the 12-month period. Because when I looked at it, it's effectively 5 months that we are left with. And then on the table on page 3, that 10th of June, I think there's a need to also be very clear with the date of lodgement. I know they're talking of the period for which application is made, but the date of first lodgement or initial lodgement is important. And then the nature of the decision is set approval, but I think there should be also inclusion of the approval of the publication. It should also be that table there. I think there's a lot of there's some enhancement that could be put to improve it. And then under 4.6, I just got a concern with that comparison, because you are saying that where that one this percentage that is indicated, it should be clear as to between what and what. It's a bit confusing. So it could be a rounding off error, but you have said that you are publishing it as submitted by NGV, but just the crafting of that 4.6 should be a bit more clearer. And I'm looking at what is that footnote there, and I think it's up to the team to then look at the price increase or the prices as not being maybe the reason for lack of market penetration. Just to try to see the issues of the price elasticity and the issue of that spiral. If they can just look at that, because it could be if affecting. And then on under 4.10, I don't understand there's this disallowed interest paying. I'm not so sure what that refers to. And then the tariff guidelines, the talk of tariff guidelines, the requirements, if you can maybe kind of briefly outline what the requirements are instead of just leaving it like that. And then the volume analysis, I think there's I'm a bit challenged there, because you talk of the reduction in forecast volumes, but as to the analysis itself in detail, it's not coming out. You end up with a sentence that says NERSA accepts this approach as determined by the licensee because it aligns with the principles of efficiency and will be beneficial for customers. And I'm asking, in what way will this be beneficial for customers? I don't get that. And then under table 3, in the volume analysis, you've please clarify that these financial years are ending in June, and now you are looking at ending in Feb, which is which, just to clarify that. And with 4.21, I would just like you to please assure us that all other factors have been rebased to 10 months instead of the normal 12 months. Just the factors that you have used to calculate, just give us that comfort. And then when I look at table 5, I'm just checking if you have the actual prices charged. I think it is going to assist in terms of looking at getting the market penetration. I note the confidential nature of that, but I'm saying for us internally to be able to assist in that regard. And then lastly, Chairperson, from my side, I had a challenge. I think there's one word where they're struggling. Sorry, the Chairperson, I made some notes. But it's more of getting the clarity. I think there's some words that have been used, but I think I can take that offline with the presenter, because I just see that it just vanished from my convene. Thank you.
Thank you, Mr. Mkhize. Mr. Pokola?
Thank you, Chairperson. Chairperson, I will start the comment on that first table. For me, I am happy that we have made that comment and shown that our what we are publishing is what the applicant had put through, because I think we're at that point where accuracy is important. And yes, so that 4.6, I was okay with it, but I would welcome whatever enhancements that Mr. Mkhize is proposing. But it just shows that we didn't just have it's not us who are not adding properly, because what matters is really what shows, not some spreadsheet that none of us have. And then my second comment, Chairperson, on table 2, I think we just need to do two things on table 2. One is on the details. For instance, in the total RAB, we just have to put in the formula that we use. If you'll see in the other submission that follows, we have put in the right formula there for someone to follow this. And then the second comment, Chairperson, is that if we look, for instance, on the trading costs at the bottom there, there's no difference in those numbers. So for us to say that there's a difference, I know it may come from Excel, but in all of the other differences that we have shown, we have just shown the 2 decimals. And just for readability, I can't look at the same number and then say there's a percentage difference. It's just that part. And I think without getting into, on the last comment, into the things that Mr. Mkhize said, we need some thoroughness. I mean, we have moved. This is a level higher than where we started, and it's an impressive level for me as a PGS. So we've really moved. And right now, we probably need to do really that last mile, that 110%. Things like the interest paying, and then there are others corrections here, just show that the next level that looks at this, the person who compiled it may not be able to see it because you're reading it fast, but the next level that checks, just check, make us get to that point where when we're dealing with this item, all we do is say approved. I mean, boards and subcommittees are not places where you find out mistakes. This is not a place where there should be a mistake. This is a place where we're talking about the content and the approval. You've made that change, colleagues. Just go into the top gear now and make it easy for these committees to work. Thank you, Chairperson. That's all.
Thank you very much, Mr. Pokola, for those words. They're also encouraging the team and encouraging improvement. Advocate Sithole?
Yes, Chairperson, thank you, and thanks to the presenter. Chair, mine, it's a point of clarity to say that does the licensee have a discretion to change its financial year as and when it wishes? If so, what is the basis for that? And is it part of a license condition or regulations, or just a discretion that the licensee has? And I've seen the reasons stated there, and I'm not sure if we are also covered in terms of our in governing regulatory frameworks or regulations or legislation. If that can be clarified, it's on page 4. Thanks, Chairperson.
Thank you, Advocate Sithole, Mr. Nxumalo, and the team.
Chairperson, I will assist with the response, and I will also ask Mr. Nxumalo to come in. Chair, in terms of the questions from Ms. Sibiya, the issue regarding the 10-month, the standard that we used as prescribed by the methodology is that NERSA uses the license period or the application period as applied for by the applicant. And the methodology further says that we must ensure that whatever application period that they are applying for, it should be aligned with the period from their supplier. Now, in this case, the applicant indicated to us that there were some structural changes in their business such that they now want to adopt the period as from their majority shareholders. And it is on those bases then that we accepted the 10-month period as applied for. Chair, what we can do is to include a question perhaps as part of the stakeholder consultation and try to check the impact. But we also note the point from Ms. Sibiya to say that this maximum price, if it was to be approved now, it would be implemented only for 5 months. Perhaps that is another point that we need to check and make sure that whatever period that is provided for is a period that will then cover the 12 months or in line with the supplier's contract. Chair, the same question was also asked by Mr. Mkhize regarding the 10-month period, and our response on that is that we will consider the impact of extending it to 12 months and also the impact of that, what that will have on the supplier's contract. And then we'll also include it as part of the stakeholder questions so that the stakeholders do provide input on it. Chair, Mr. Mkhize also provided input on table. I think it's regarding the date of the application, the 10 June 2025, that is reflected there. He mentioned that the initial date is important. Chair, we will correct that by indicating the initial date, which is April. Now, the third input from Mr. Mkhize, he asked that we explain the percentage difference, that 1% difference, where it's emanating from. So it is emanating from the error from the applicant's side, but we will include it under paragraph 4.6 so that we are clear on how the applicant made an error and versus what is the NERSA's maximum, the calculated maximum price.
But as indicated by Mr. Bukula there, it must be very clear that this is the information submitted by the applicant. So you have put it as is, that information. So where now there's some analysis by NERSA, preliminary analysis, then you can pick up that error at that point, because we do want to present it as is, as submitted by the applicant. Mr. Mkhize has a follow-up question.
Chair, if I might just come in here, I think, let me just be clear. 4.6, just how 4.6 is written, I'm saying just enhance 4.6 because in line with the asterisk that you have put underneath the table, you say it is important to know that the 1% difference between what and what. For example, the 1% in terms of the overall figure and the summation of these different line items. should just be clear, because you are just saying of 1% difference was identified, and it's not so clear. Just to write, like to rephrase it. That's all. The reason is appreciated that they have indicated what the source of this difference is. Thank you.
Okay, Ms. Makota, it's just enhancements on the note there. Thanks. You may proceed to the other questions.
Yes, thank you, Mr. Mkhize. I think it is clear now. We must indicate the source of the difference. Chair, there is a question that he posed under regarding the footnote. I didn't hear it clearly, but it seems he was saying that we must look at the impact of that, the increase in the trading cost on the entry, whether it has an impact of ensuring that there is no entry in the CNG. But we will look at it, Chair, and also try to amend it. Chair, the other question is, it is an error, really. It's regarding the interest paid. We wrote the interest paid. We apologize. We will correct it. Chair, Mr. Mkhize also indicated that we should look at our volume analysis. It is not clear as the way that we have reflected it. Chair, what we are trying to indicate under the volume analysis is that there is a reduction when you compare the previous year's forecast with the current year forecast. There is a reduction by 12.5%. We will amend the paragraph there to make sure that it is clear. Chair, the other issues from Mr. Mkhize was regarding the clarity regarding the financial year, and also give an assurance to the committee that the factors that were used in the calculation were adjusted to 10 months. We can give an assurance, Chairperson, that the factors that were used were based on the 10-month projection as provided for by the applicant. Chair, Mr. Bukula indicated that he is happy with Table 1, but we will correct it based on Mr. Mkhize's input. The other issue from Mr. Bukula is regarding the issue under Table 2, the correction on the total RAB. We must put the formula there as so that it can be standardized, same as other applications. Chair, regarding any error in the submission, we apologize for it. We will make sure that it doesn't happen again. The CEO indicated asked whether NERSA has a discretion when it comes to the license period or the application period. Chair, in terms of the methodology, we accept the applicant's period, but in accepting the applicant's period, we also check the alignment with the supplier's contract. And in this case, we have taken the inputs from Ms. Sibia to say we must check what is the impact of extending it to 12 months, and we will do so. Thank you so much, Chairperson.
Thank you very much, Mr. Kotora.
Thank you, Chair. I wanted to add that a licensee cannot just change its year-end period, let's say from June to February, nearly, Chair, because there's a consistency principle that's required in accounting. So in this case, the applicant has changed its financial year-end period because they have been acquired by another entity. So to align with that entity's financial year-end, they have changed their financial year-end. But accounting requires that if you report in a certain way, like if your financial year-end is June, you have to adhere to the consistency principle, and you have to explain like what they did, why there's that change. I just thought we could also clarify that, as it was part of, I think, the question asked, Chair. Thank you very much.
Thank you, Mr. Kotora, for clarifying that. And I think it is proper because we had looked into it where we had some specific request from the licensees to align there are 12 months period of validity of the prices to align them with their financial year, and we did accommodate that. And also it aligns with the cost allocation manual. So where then the period is shorter, it will affect us in terms of the monitoring itself, and also in terms of their own cost allocation manual, including this one. When we look at the overall period of 12 months, and also the regulations, when we look at the what we call the annual volumes, as you know, that's how we are supposed to apply ourselves in terms of the regulations. We look into the total annual volumes, not less than the 12 months. So the annual volumes is what we are concerned about, and also in respect of the regulations. So it cannot just be a shorter period. Yes, in this case, the licensee, because of certain uncertainties that are happening, the way, there's a looming restructuring that is happening within the company, they made this request. But I think we must stick to what the regulations requires of us. Look on the annual basis and be able to implement that the price on an annual basis. Anything else that they're going to be complaining about for the two months, it's a matter of monitoring of compliance. It can be taken as such. However, for purposes of the consultation, as Ms. Makoda indicated, she will also put the question there to stakeholders, but also engage even with the licensee in this regard, indicating the requirements of the law as stipulated in the regulations. With that, members, and the responses that have been provided by the team, the enhancements, including the clarification of the period of validity as explained, and other enhancements in terms of the formulas that they must be put clearly. With that, are members then happy to note the preliminary assessment as a discussion document, and also to approve that the discussion document be published for stakeholder comments, including the enhancements that have been made by show of hands, members? Thank you, Madam Smia. Thank you, Mr. Pukula. Thank you, Advocate Sithole. Thank you, Mr. Mkhize. Thank you, members. The enhancements will be taken into consideration when the matter is published for comment. We then move on to the next item on the agenda. The next item is item number 7, which is the preliminary assessment of Virtual Gas Network Pty Ltd, which is the sister company of this one. Application, again, it is from May 2025 to 28 February 2026. So it is similar. It's a sister company focusing on different models, business models. If you can please introduce this matter and take care of the comments made by the members in the earlier submission, please. Be much brief on this one. Thank you.
Thank you, Chairperson. This is the preliminary assessment of Virtual Gas Network, or VGN's, application for a maximum price in terms of Section 211P for the period 1 May 2025 to 28 February 2026. Chair, as you have stated, this is the sister company of NGV that has been dealt with in item 6. VGN has also requested a 10-month period for the application, and the reasons are on paragraph 4.2 to 4.4, and as discussed in the previous item. Chair will also then effect the other deliberations and enhancements already discussed in the previous item that are similar to this one. Chairperson, VGN has applied for a maximum price of 293 Rand 30 cents per gigajoules in terms of the cost plus methodology, and that is outlined in Table 1. Chair, through the guidance of the PGS in the previous applications, NESA and VGN underwent an extensive pre-application process to minimize discrepancies in the calculations. Hence, members will then see that the differences between NESA and the applicant's calculations are quite minor. We will also then add the date of the initial application when the initial application was submitted as already deliberated in item 6. Chairperson, in the preliminary assessment, NESA analyzed all components of the maximum price, and the details are in the discussion document attached to this cover submission. Perhaps maybe just as a point of note on the profit component, there is that deviation that is also discussed in the NGV application. And Chairperson, there, to be consistent with the energy regulator's decision made in 2024, and considering the challenges in the CNG segment of the market, such as the volume ramp-up issues that have been discussed, we view this approach as calculated in the application as an effective method to also deal with the issues that are experienced. So preliminarily, we have accepted this approach as submitted by VGN. Chairperson, lastly, NESA calculated a maximum price of 293.31 cents per gigajoules, and the differences emanate from trading costs and in particular the trade payables calculation under the working capital calculation, Chairperson. The recommendations are on page 7. We recommend the PGS to note the preliminary assessment of VGN for the period stated and approve the publication of the discussion document. Thanks, Chair.
Thank you very much. Members, any questions? Questions of clarity or guidance? If none, members, may I then request that members raise your hands. The decision has already been read out. If you can raise your hand in support of the decision, noting those enhancements that members pointed out earlier. Mr. Mkiza, thank you very much. Thank you, Mr. Bokula. Thank you, Madam Sibia. Thank you, Advocate Sithole. I also support it. Thank you very much, members. Members, we now move on to the next agenda item, which is the preliminary assessment for the application brought by SLG for the maximum price of gas for the period starting 1st July 2025 to 30th of June 2026. Please introduce the matter.
Thank you, Chair. Good morning, members. I would like to introduce the application by SLG Pty Limited for the period of 1 July 2025 to 30 June 2026. SLG is applying for a maximum price of 155.34 for traders and 166 for end users, as shown in Table 1. This maximum price is broken down into cost of gas, trading costs, and the profit component. The application was received on the 19th of July. I just want to point this up front that, I did put a footnote to the fact that we did not interfere with the calculations of the trade margin of from SLCNG. NESA analysis, we have analyzed the application as follows. Because SLG is supplied by 2 suppliers, they're supposed to be using the weighted cost, average cost when they're calculating. They have then deviated. And NESA, we have calculated using the requirements of the methodology. Our calculations are shown in Table 5. In terms of the profit component, SLG used the figures as posted by NESA on the website. There was no difference there. In terms of the trading cost, we have calculated the trading cost, and as shown in Table 6, then the difference between NESA and SLG is 1%. Thank you, Chair.
Thank you, Ms. Geno. Members, any questions, comments, guidance on this one? By show of hands, members. Mr. Mkiza, please go ahead.
Thank you, Chairperson, and thank you, Madam Geno, for the presentation. I'm looking at 4.21 and 4.22. Just to get clarity, when it comes to the adjustment, there will be a monthly adjustment that then gets factored in the next quarter as a clawback, or like the under recovery or over recovery, or those prices will be changed or adjusted month on month. I just wanted to get clarity in terms of the actual price that then is going to be factored into the maximum gas price. Thank you.
Thank you, Mr. Mkiza, Ms. Geno, and Ms. Magoda and Mr. Numa.
Let me start. In terms of the adjustment, because SLG has chosen to use the other suppliers' cost of gas, they are adjusting their cost. Their cost has to be aligned to the cost of, to the price of the supplier. The supplier is adjusting their actual. This is the actual that they will be adjusted in terms of the rand and dollar difference on a month by month, the overs and unders. That is what we're trying to explain in that section. I'll ask Mr. Magoda to add. Thank you.
Ms. Magoda?
Thank you, Chairperson. Chairperson, what SLG is applying for is the adjustment of the maximum price based on a month-to-month basis. They are saying that they want the price that they charge to their customers to be in line with the supplier's contract. And in terms of how this was done, you will recall that in the previous financial year, NERSA has approved that the price of the highest price of the cost of gas acquisition be used instead of the volume weighted average. And that then had an impact that because that highest price is adjusted on a month-to-month basis, it then means then that their cost acquisition is affected, which had an impact of then adjusting the maximum price on a month-to-month basis. This is done also to avoid the issues of clawback, because if the prices are adjusted on a quarterly basis, it then means then that there is that difference and the applicant is now forced to apply clawback for it. Now, to avoid the clawback, they are asking that the prices be adjusted monthly. Thank you, Chair.
Thanks, Ms. Magoda. Mr. Mkis?
Yeah, thanks, Chairperson. I appreciate the responses in an attempt to deal with this matter, but I'm just highlighting it as a point that I think internally we need to consider it to see how best to deal with the pricing of gas, noting that it is dollar denominated, and sometimes the people that will talk against gas will also highlight that issue of the dollarization of our market and how then to deal with these rand-dollar exchange rates. I think it's important just to kind of look at what works best in one looking at the stability of the pricing mechanism vis-a-vis to proper and due compensation, timely compensation of the traders or I would say the gas suppliers in the country. It's just something that I think we need to look further into. Thank you.
Thank you, Mr. Mkiza, for that point. I think on this issue, just on this one, for these suppliers importing this gas from Mozambique, We have been for, I don't know how many years now, since 2005, we've been regulating this gas from Mozambique being imported by Sasol Gas, and they're also paying in dollars, and we know that the contracts are in dollars, and we used to even calculate the minimum prices landed in Secunda. So those were the submissions that used to come to the PGS for a period of 10 years. We ended that in March 2014 when we used to calculate the landed price that is converted into the rands as they are buying in dollars in Mozambique. So this is something that is not new that we have been doing. So this licensee must not do something that it feels that it is peculiar to this particular licensee. They are buying the extra gas in Mozambique. Yes, it will be in dollars, and then it gets landed in Secunda. And then from there, it gets into the Sasol pipeline in Secunda. And if you look at the volumes that they are buying from this other supplier, they are much lower in terms of the volumes that they are buying from Sasol. So I think also it will be an unreasonable thing for customers if you look at it on a month-to-month basis. It's something that might not be sustainable, and even for customers to keep track of that, even the regulator to keep track of that. So it's something that can just be looked at maybe in terms of the questions, looking at the impact of doing it on a month-to-month basis, because they will be able to change maybe their billing system, but it's important for customers and also for predictability and certainty for customers that maybe they can look into any changes on a quarterly basis at least, or twice a year. So those are some of the questions that they can put forward to the stakeholders. Otherwise, the majority of the gas is not bought from this supplier that is now using the issue of the US dollars. Even the main supplier has been using the rand and to convert from the US dollar in terms of the cost of gas, and it's still happening to date. So I think they can just put questions there in terms of that specific issue. With that, members being clarified, I just wanted the decision that is sought was read out, which is to note the preliminary assessment with the enhancement of the questions around the frequency of updating or adjustments of the price. Putting those questions there, but take note of the clarification that has been provided, if that can be noted in terms of the discussion document, and then to publish the preliminary assessment for stakeholders' comments. By show of hands, members, if you are in agreement with the decision that is sought. Thank you, Mr. Mkhize. Members, thank you, Madam Sibiya. Thank you, Advocate Sithole. Let me check, Mr. Pukula. Are you happy to support? Thank you, Mr. Pukula. Thank you very much, members. Members, the next item to be considered is the calculation of the market risk premium as well as the risk-free rate that are calculated. It's on a quarterly basis, the submission that is before us, and this is calculated for purposes of the maximum price, the section that deals with the trading cost, as well as for purposes of the tariffs. Please introduce the submission. Thank you. Madam Sibiya, is that a legacy hand? It's a delayed hand?
Yes, Chair, apologies.
Okay, thank you very much. All right, please, can you introduce the submission?
Thank you, Chairperson. This is the update on the market risk premium and risk-free rate calculations for the quarter ended 30 June 2025. Chairperson, the calculation and publication of the MRP and risk-free rates is intended to assist stakeholders in maximum price and tariff calculations, as you have stated, and also to enhance consistency in the calculations of these components. Chairperson, we publish these calculations on a quarterly basis. In the current quarter, the calculated MRP is 4.58% and risk-free rate is 9.86. Chair, the updated calculations are attached as Annexure A, and Table 2 then compares the calculations calculated for this period and the previous quarter. Chair, the recommendations are on page 7. We recommend the PGS to note the updated calculations of the market risk premium and risk-free rate for the quarter ended 30 June 2025, and the publication of the calculations on the NESA website. Thank you, Chairperson.
Thank you very much. Members, any questions or comments, except that just that last recommendation in terms of approving for the matter or for this calculation to be put on the website? It was stated clearly before that you don't need to ask for permission or a decision for that. So if members can just take it that it will be removed, that part. But any other questions, members? If none, members, can you please raise your hands just to show support of the decision on the calculation of the MRP as well as risk-free rate? Thank you, Mr. Mkhize. Thank you, Mr. Pukula. Thank you, Madam Sbiya. Thank you, Advocate Sithole. I also support. Thank you very much, members, for the support. We now move on to the next agenda item, which is item number 10 on the agenda, is the quarterly report on the calculation of the maximum gas energy price for the period April 2025 until 30 June 2025. Please introduce the matter.
Thanks, Chairperson. This is the quarterly report on the maximum gas energy price calculations confirmed by the full-time regulator member, FTRM, primarily responsible for pipe gas regulation. This is for the quarter 1 April to 30 June 2025. Chairperson, I would like to add on the delegation matrix that the sections Section 3.1 and Section 2.7. There's an omission there of Section 2.7. Chair, the new methodology was approved on January 2023, and in terms of the methodology, the maximum prices for importers from regional markets is determined based on the cost plus methodology, and the maximum price for LNG importers is determined by referencing it to JKM, or the Japan Korea marker, as a benchmark. And there's also an aspect of Brent crude indexation. Now, Chairperson, for transparency and predictability purposes, NESA then calculates and publishes the maximum prices benchmarked using these two components on a monthly basis. And as an added factor there, as of January 2024, NESA also then started publishing Henry Hub prices on the website for information purposes as requested by the DMRE. Chair, Table 1 shows the gas energy prices for the months of April, May, and June 2025 that have been confirmed by the FTRM. The recommendations, Chair, on Table 5, we recommend the PGS to note the monthly maximum gas energy prices calculated for these months, April, May, and June of 2025, which were confirmed by the FTRM and have been published on the NESA website. Thank you, Chair.
Thank you very much. Members, any questions, comments, guidance on this matter? If none, members, by show of hands, members, if you are in support of the decision to note this quarterly feedback on the task that the energy regulator assigned to the full-time regulator member. Thank you, Madam Sbiya. Thank you, Mr. Pukula. Thank you, Mr. Mkhize. Thank you, Advocate Sithole. I also support it. Thank you very much, members, for the support. We now move on to the report on the on developments in new gas sources in South Africa, neighboring countries, that will have an impact on us. That's item number 11 of the agenda. Is it a late hand, Mr. Pokula?
Apologies, Chair.
Thank you. Thank you. All right, you may proceed then on item number 11.
Thank you, Chair. Good morning to you, the members and the colleagues. I'll take the report as read and just go straight to some of the notable developments from the report. There are two initiatives that I would like to highlight. These are considered priorities in bringing LNG into the country and in potentially softening the impact of the gas cliff. The first one, Chair, is the Zululand Energy Terminal project, which is also known as a ZET project, which is a joint venture between Transnet Pipelines and Vopak Terminal Durban. The project is aimed at developing an LNG floating storage unit and offshore regasification infrastructure capable of delivering approximately 400 million standard cubic feet per day in its first phase, which translates to just over 430,000 gigajoules per day. The project is in the advanced stages of its capacity allocation process, with negotiations ongoing with potential customers. In February this year, ZET signed a 25-year terminal operator agreement with TNPA to develop, construct, and operate the terminal. Currently, the project has an operational start date set for mid-2028. It is expected to contribute to energy security and diversify the country's energy mix, including a significant contribution to Eskom's 3,000 megawatt gas-to-power project that is in the planning. Parallel to this project, Chair, Transnet is exploring the conversion of the Lily pipeline to enable the transportation of gas from the Richards Bay terminal to Durban, as well as the inland regions. The project is currently in the planning stage, with construction scheduled to begin in early 2026 and is expected to take approximately 3 years to complete. The second project I would like to highlight is the Motola Import Terminal project, which is similar to the ZET project in that it aims to utilize the existing gas pipeline. In this instance, the Romco pipeline will be used to transport LNG from Maputo to Mozambique, from Maputo in Mozambique to South Africa. The project is being developed by Total Energy in collaboration with the South African company Gigajoule, as well as several Mozambican entities. Just like the ZET project, it involves the construction of an LNG floating storage and regasification unit at Motola Port near Maputo. The facility will receive LNG shipment and deliver regasified LNG to the South African market via the 106-kilometer Motola Gas Company pipeline, which is connected to the Romco pipeline near the Rezano Garcia. In June this year, Total Energy and its partners confirmed that the fabrication of the floating storage and regasification unit was in advanced stages and remained on schedule for delivery to Motola Port by early 2027. The construction of a 106 kilometers MGC pipeline also began around June this year, with early civil works having been confirmed as complete. The pipeline is expected to be operational by the fourth quarter of 2027. The projected nominal capacity remains approximately 2.5 million tons per annum, with firm construction commitment from the consortium of South African industrial clients. Furthermore, Chair, the report covers several key developments in the neighboring countries such as Namibia, Tanzania, and Mozambique. In Mozambique, Chair, the LNG sector remains pivotal despite ongoing security and political challenges. The Mozambique LNG project has resumed site works as of last month, following the lifting of the force majeure. With the first production now expected between 2029 and 2030. Chair, I will be stopping from there. The report is here for noting. Thank you.
Thank you very much, Mr. Mtiane. Members, any questions, comments, some suggestions on improvements? Madam Sbiya?
Thank you, Chair. Chair, thanks to the presenter and thanks to the team for giving us this report. Chair, I think it's a very interesting report. And as NESA, to actually be aware about what is happening out there within the industry. Because I think 2 or 3 weeks ago, we were sitting having engagements with our other African counterparts, Tanzania, for example. And the message was clear that they have the excess capacity that is available. So to know about all of these sources is very critical for the country so that we can plan ahead, and because we are all aware of what the instability that happened in Mozambique, the impact it was going to have, not only the instability, but now there when the supply is going down. But Chair, I wanted to ask the team to say, now we have all of this. This I'm not saying in disrespect about our beautiful continent of Africa, but I wanted to ask the team maybe through our ministry to say, are there any other mechanisms that they can work with or have alignment or projects be run at that level, because they deal with policy? Because there are a number of countries involved. For example, when we had this issue of saying Tanzania has excess capacity. So the issue is now, how do SA companies tap into that? So those are the things that need involvement of not only South African and Tanzanian government, but also it also involves business from both the countries and also from other countries where the infrastructure will pass. So all of that whole system that they need to use, or the meeting or collaboration between all of those countries, because when you move from Tanzania to South Africa, you pass about 2 countries. Or if you want to go via Mozambique, then you go via Mozambique and then come to South Africa. So those are all the things that we need to deal with our shareholder, involve the department, the shareholder, the business, so that we can know about the sources. And then those negotiations start now before we get into serious trouble when where we currently get gas, the volumes drop significantly. The action needs to start now, whilst obviously it is still cheaper. Thank you, Chair.
Thank you very much, Madam Sbiya, for that input. Mr. Mkhize?
Chairperson, and I think must also appreciate echo my appreciation for this presentation from a point of view of being informed of the developments in this sector that you regulate. And I note also that part of it covers also the oil side of things, because there's always this associated gas when one looks at oil. I note, for example, under 6.7, paragraph 6.7, we're talking of you are referring there to the plans to restart operations, excuse me, mid 2025, and we are roughly there at mid 25, even being on the other side of it. So I think it will also help if there are updates that you give verbally, because the time of writing the report and to have the report serving before us, there's that discrepancy, just to be able to fill that in. Particularly, I note you do talk of mid-25 a lot in the document. I think even on 6.5. I think that would help just to be prepared to check what the developments are between the writing of the report and serving here. And also to be clear in terms of the next steps with some of these things, it will help so that the reports are progressive or incremental in terms of what was presented previously and what the developments are going forward, and if those have been realized or not. You talk, for example, of 6.4 total energy securing environmental authorization in early 25 and them to drill 7 exploration wells in the southern deep water Orange Basin, which were supposed to start in mid-25, if these have commenced or not. For example, I think that page 4 is full of those. And then if one look at the picture in Mozambique, I think what else you are saying is pivotal and it's looking up, but the picture that's perfect is actually presented, doesn't look closely. Just a comment that, we were able to talk to, in terms of the language or the manner we phrase things, we are able to really capture what is happening on the ground. And I think that looking at the report, some aspect of the report, I think it will help to qualify that the report is mainly a desktop study with a few inquiries that are then made following that desktop study, just to protect you from maybe undue scrutiny, like if you were to be talking to the players involved. And then under 6.13, and you touch this thing also elsewhere, the issue of collaborative opportunities. This is one area that I think some kind of emphasis should be put, as well as some recommendations in this regard. Because if you read the report, you are neighbors, but this case is already spoken to. And I think it's also the challenge with regard to when one goes to the public domain, because it appears like, because it's in Mozambique, we can just get it. Because it is in Namibia, we can just get it. And I think that if you are able to talk to the issue of government to government relations, what has happened with the gas commissions, for example. We've got this regional gas development master plan. What are the prospects of it being implemented? Sometimes we are good at coming up with this, but now in terms of really implementing it and leading the charge in that regard, it's important how to have those government to government and SOE to SOE relations. For me, we should come strongly on that. And I look under 6.19. You are talking of the uncertainty that has caused a freeze in industrial investment. It appears that like it's a too strong a statement if not a direct quote is used. So consider some of the statement if someone has spoken to them, that you put them in quotes. So it's not like we are saying that it is like that. We check it as gospel truth. The other comment is in terms of the Zululand, that the construction has commenced in the early 2025. I would like to know, this is under 6.3, paragraph 6.3. If 6.35, sorry. I was not aware that there is already some construction that has taken place. But just to confirm if that is true. I think let me stop here, Chairperson. Safe to say that I really appreciate this report, and I think that for me it also says that we need to form partnerships with the PASA and other regulators in the value chain, so that we are able to, because a lot of it is actually in the upstream part of development. And then lastly, I think the the aspect that needs to be beefed up is with regard to the readiness of the regulatory framework for enabling the monetization of development and suggesting any enhancement that is required for execution. For example, if the moratorium on shale gas is lifted, are we ready from a regulatory perspective, not only as NERSA, but as South Africa? Because sometimes the regulation end seems to be the one that could derail things in terms of really monetizing and getting the market and the economy ready for increased utilization of gas. Thank you.
Thank you very much, Mr. Umalo and the team, Dumisani, Mr. Litsatsi. If you can, before we get to the decision part, if you can respond to the questions and also just statements that may not necessarily be accurate, so that for the record, those statements are not included in the report, especially the statement on LNG in Matola as well as Richards Bay solutions. When you link those with the issue of the gas cliff. So you need to be very accurate there, so that you don't put statements that are not necessarily representing what is happening. Just so that you can clarify the issue of the gas cliff, which is very different, and then how you now tie it up with the Matola LNG as well as the Richards Bay. So if you can please deal with that, so that you put accurate information, and also just try not to give some indications or some perception that there are plans, whether Mozambique or Richards Bay are set, that there are timelines that are set and all of those things. So let's not put information that is not necessarily the case. Can you please then respond to other questions that are raised by the members, but taking into account the statements that you have made, so that those statements are then removed from the report, especially for the issues that I've also stated. Thank you.
Thank you, Chair, and I appreciate your comment, and especially on the issue of the gas cliff and the link between the ZET and the Matola. I stand corrected on that one, Chair. But yes, we've noted the input and the guidance from the members, and indeed the points that they've mentioned are very, very important, and we will ensure that these are taken into consideration in our submission going forward. And then while I do note that most of these comments from members were matters of improvement, I would like to take this opportunity to respond to some of the issues that are being raised. Let me starting with Mr. Mkhize. Yes, there is on the issue of the gap between when the report serves the committee and when the report is being written. Yes, sometimes we do get that overlap, where you find that by the time these issues are being discussed in these committees, some of the development have been overtaken by events. And the analysis that we sometimes present, you find that is not a lot of the issue of the collaborative effort. We note that, and that from Mr. Mkhize, and then you ask that we need to present in the report, present the collaborative effort between government to government and the region in the region, and SOEs to SOEs. Those we will make sure that those are captured in future reports and they're highlighted, and also the statement that may have appeared strong in the report. We'll make sure that we also look into that and make sure that we tone down on some of those that may be misinterpreted. And then the issue of Zululand, the project in the ZET project. Yes, the information that we received that is that there is been some the project has commenced in some capacity. This is the information that was presented to us by the project owners down there in KZN. So there is some progress in that regard. So that information appears to be accurate. Chair, if there's other question, perhaps maybe Mr. Ngumalo can come in and assist if there's any other questions that I've missed. Thank you, Chair.
Yeah, thank you, Chairperson. Sorry to just come in. My hand is giving me problems today. I just wanted to come in on the one question that was asked or the input provided by Ms. Sibia, and which is really very important to say we need to find a way or mechanisms through which to actually make sure that we bring this to fruition in terms of the findings that occur in other provinces, particularly in other countries, particularly within the SADC region. And there used to be a structure in the past called the Gas Commission, and that was the ideal structure. I think the department will possibly advise on its resuscitation as when the time is appropriate. But that structure actually had representatives or participants from industry, from stakeholders, licensees in Mozambique, in South Africa, and recently in other countries such as Angola. But that was the type of structure that perhaps could work going forward, just to make sure that industry and private sector comes together and basically now to agree on the way forward, to discuss and agree on the way forward as to how we can really, as SA Inc., approach even the countries where these gas sources are identified, and so that we can basically make sure that we effectively take advantage of those and benefit as a country and as respective countries. So I just wanted to clarify that part, because I think the point that Ms. Bia was raising is a very important one, to say we need to really look beyond simply just crafting and writing these reports. It needs to have meaning, and it can only have meaning when we start looking at appropriate steps that can be taken to ensure that we benefit out of it. Chairperson, I think the rest were enhancements. I think they are already covered in what Mr. Mchianis has stated earlier. Thanks.
Thank you very much, members. Some questions of enhancements will be considered, including the statements that have been corrected to the extent that they were not accurate, to link them up. So those will be taken care of before the report is put on the website. With all of those questions and the clarity that has been provided, are members happy to note this report? By show of hands, members. Thank you, Madam Sibia. Thank you, Mr. Bukula. Thank you, Mr. Mkhize. Thank you, Advocate Sithole. I also support. Thank you, members, for your support. We now on item number 12. Item number 12 is the ROMCO gas transportation agreement tariff for the period to April 2025, as well as up to the 30th of June 2025. Please take the report as having been read. Thank you. Mr. Pugula, is that can I lower your hand? I think it's a delayed hand. Thank you. Please go ahead.
Thank you, Chair. Good morning, Chair, members, and staff. Chair, this, as you've said, this is a submission on ROMCO's GT1 tariff for period 1st April to 30 June 2025, which is referred to as Q2. Chair, the purpose of the submission is for the subcommittee to note that ROMCO's GTA1 tariff of 21.52 per gigajoules was charged for this period of Q2. And then, Chair, the reason why the submission is before the committee, this is in line with the delegation matrix, section 3.1 of the delegation matrix. Then, Chair, as a bit of background, the monitoring of this submission, the monitoring of this tariff is in line with the pipeline agreement between the two countries, South Africa and Mozambique, and also SASO. And also in this submission, Chair, we also forecast the following quarter's price. Then, Chair, when it comes to the monitoring outcomes, given the data that was provided by the licensee, that is in table 4, the licensee was compliant, and the price that was charged by the licensee was the correct price as per the agreement. And then, Chair, for the following quarter, the price is expected to increase by 1.36%. This is driven by the change in the PPI figure from Q1 to Q2. And then, Chair, the recommendations are as per number 14. Thank you, Chair.
Thank you, Mr. Njesula. Members, the ROMCO tariff, the calculation in terms of the formula prescribed in the pipeline agreement is before you. If there are any questions, the tariff for the previous quarter has been adjusted using the PPI. Any questions, members? If no questions, members, are members happy? Then, Mr. Mkhize, is there a question?
Thanks. I think thanks for the presentation, Mr. Njesula. I think under 4.7, if you could just update the ownership or shareholding structure as things stand now. I think that would assist. Yeah, that is all from my side. I'm happy to know.
Thank you. I guess you can just note that, Mr. Njesula, just the issue of the shareholding given the what is it, the 20 or 30% shares that were sold to the government entities in the ROMCO. So if you can just take note of that to update that. Okay, thank you. Members, any members by show of hands, if you are in support of noting the item number 12, ROMCO GTA1 tariff. Thank you, Mr. Mkhize. Thank you, Mr. Pukula. Thank you, Advocate Sithole. Thank you, Madam Spear. I also support. Thank you very much, members. The next item is the volume balance report for the month of June 2025. It is here for noting. Please take us through this report.
Thank you, Chairperson. Good morning, and good morning to the members, and good morning to colleagues and members of the public. The purpose of this submission is to request Pipe Gas Subcommittee to note SASOL gas volume balance report for the month of June 2025. During the month of June, SASOL imported approximately 13.2 million gigajoules of natural gas to South African market. The variance percentage is negative 1.05, which is not within the acceptable limit of the agreed international benchmark of 1%. It is recommended that the Pipe Gas Subcommittee to note the total gas volume balance report for the month of June 2025. I thank you, Chairperson.
Thank you for that. Members, any questions, comments on this report? If no questions, members, by show of hands, if you are in support of the noting of the monthly volume balance report for the month of June. Thank you, Mr. Bukula. Thank you, Mr. Mkiza. Thank you, Madam Smia. Thank you, Advocate Sitole. Thank you very much, members. Members, this is the last report to discuss in the open meeting. We do have items for the governance part of the meeting. At this point, I would like to thank the stakeholders that have tuned in to observe today's proceedings. We appreciate your interest in terms of the way in which the energy regulator deliberates on these matters, and to ensure that we will remain accountable in terms of the issues that are discussed and the decisions that we are taking as the energy regulator, so that the process that we follow is a transparent process, and you can appreciate how we have arrived at the decisions. Thank you for your time. We now going to switch